Hey moneymakers, I'm Kalila Reynolds. I just feel rich in this outfit, like I should just do the whole show saying, yes, darling. Well, welcome to Taking Stock, and if I look like money, it's because we're talking about money. We have a great show lined up for you today, but first make sure you sign up to my newsletter at KalilaReynolds.com, where you can also read episode summaries, articles, and transcripts, and watch or listen to all your favorite shows. You can click the link up here or in the description box below. Now come on, let's get this money.
First up, despite being in a global pandemic, real estate interest has skyrocketed. That's according to data conducted by Sifi Studios Jamaica, the entity behind the country's first and largest digital real estate platform, Keez.
There was a demand-supply ratio of 40 to 1. So that's 40 people for one property.
We'll find out more about the data from Sifi Studios co-founders and CEO. And later, the analysts weigh in on the latest market developments. PamJam Investment took a massive 5 billion Jamaican dollar hit last year as a result of the negative impact felt from the COVID-19 pandemic.
Nonetheless, even though their earnings was impacted significantly, I think that like many of these companies, their balance sheet is very solid.
And US world leader in innovative casual footwear for women, men, and children, Crocs, is reporting a 13% increase in its revenue for the fourth quarter ending 2020.
It has wide functionality in terms of how it's used, and because of that, it has generated strong demand, and it has a strong core following in terms of its customer base, which is a competitive advantage.
We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Over 116,000 Jamaicans were out of a job as of January 2021, according to the Statistical Institute of Jamaica Statin. The figure is 15,000 more than a year earlier and brings the unemployment rate to almost 9%. The total labor force shrank by more than 4% to 1.3 million for the period. As expected, the largest job losses came from accommodation and food service, arts, entertainment, recreation, and other services. However, there were also losses in wholesale and retail trade, repair of motor vehicles, and motorcycles. Meanwhile, Statin says a little over half of the households in Jamaica have lost income since March 2020, when Jamaica confirmed its first case of COVID-19. The cost of goods and services went up in March. According to the Statistical Institute of Jamaica, inflation for the month increased by 1.1%. The rate was impacted by one of the big categories, housing, water, electricity, gas, and other fuels, which went up almost 5%. Food and non-alcoholic beverages, the heaviest weighted division, rose by 0.2%, and transport 0.5%. The inflation rate for the past 12 months now stands at 5.2%. The Bank of Jamaica BOJ is now officially independent. This means the central bank no longer answers to the finance minister, and the government cannot borrow from the central bank except in a national emergency. On Friday, the BOJ announced a new board as the new law which granted it independence came into effect. Governor Richard Biles leads the board, which also includes Senior Deputy Governor Dr. Wayne Robinson, Dr. Christine Clark, Andrea Coy, Gary Butch Hendrickson, Howard Mitchell, and Richard Powell. A deputy governor will also be appointed to the board by the Governor General on the recommendation of the other board members. The BOJ also named new monetary and financial policy committees last week in line with its new objectives of maintaining price and financial stability. Proven Investments is acquiring 100% interest in Heritage Education Funds International. The company has entered into an agreement with Heritage's current owner, Knowledge First Foundation in Canada. Heritage specializes in administering and managing education savings plans, ESPs, for clients in the Bahamas, Bermuda, Jamaica, and the British Virgin Islands. Proven says the acquisition is an opportunity to widen its presence in the wealth management space throughout the Caribbean. Completion of the transaction is subject to regulatory approval and other customary closing conditions. Jamaica Producers Group has acquired 50% shareholding in Keez Shipping Line, a service that connects the United Kingdom to the Eastern Caribbean. The remaining 50% of the company continues to be held by shipping service Seatrade, headquartered in Curaçao. The terms of the transaction were not disclosed. Keez will now operate as an associate of JP, with its management team still in place. In a joint statement, the companies said the acquisition is a key component of JP's strategy to continue to strengthen and expand its investment portfolio in Caribbean logistics and infrastructure. Keez has some £17 million in net assets. Sagicor Group shareholders on record as at April 26 will receive dividend payments of $61.24 per stock unit come May 14. The company also intends to pay out all previously announced dividends that remain unpaid as a result of Bank of Jamaica's BOJ's order last year to suspend the distribution of dividends for the 2020 financial year. In May 2020, Sagicor had announced that it would pay declared dividends to small shareholders after the BOJ revised its order. The central bank has now authorized the resumption of dividends to all shareholders, clearing the way for larger shareholders to also get paid. The central bank also gave clearance for companies to resume the declaration and distribution of dividends for the 2021 financial year.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. When we come back, the real estate market is on fire right now. What does it look like for the rest of the year? Should you buy now or wait? Hey moneymakers, you're not an official part of the family until you have your merch. Visit KalilaReynolds.com/store to order your t-shirt and your mask today. Let's get this money. This segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy, and Massey United Insurance. How good is your insurance? Welcome back to Taking Stock. Home ownership is a dream for many Jamaicans, but with property values continuing to rise and uncertainty lingering in the COVID economy, you've probably been asking yourself, is this the right time? Well, if you want the keys, check out Keez, Keez. See what I did there? It's a property app that's just revealed some very interesting data on the real estate market. You don't want to miss this. Keez was developed by Sifi Studios Jamaica, and joining us now are co-founders Ajani Harris-Williams and Marvin Whitfield. Hey, hi Ajani, hi Marvin. How are you guys doing?
Hi, Kalila. Great.
It took me a little bit to get Keez, that Keez actually, is pronounced like keys to your home.
Exactly.
That spelling was intentional?
Quite. Yes. It took me 3 weeks of Marvin pushing me to come up with a new name, because the first name we had was Realist, and we realized it was trademarked in the States. Mm-hmm. Marvin said, it's not going to work, so you have to come up with a name. And I threw like 15 names at him. He's like, no. And then it just came. I just said yes, and he said yes, and then the logo kind of fit as well.
Yeah. So all right. So before we get into some of the findings of your research, tell me a little bit about what Keez is and what it does.
Keez is a real estate platform, obviously a digital real estate platform. It allows users to easily and quickly find places all over Jamaica. So they can easily search, find, and discover properties like never before. So one of the cool features about when we say discover is that one of the key features is that it's a nearby feature. So literally when you download the app and you allow location, it can actually show you properties nearby anywhere you are, anywhere in Jamaica. And then Keez also helps people to get pre-approved very fast and very conveniently, so they don't have to go into the bank. We currently have 3 banking partners, NCB, VMBS, Victoria Mutual, and also Sagicor. So instead of the traditional way of calling a bank or going into the bank multiple times, you literally can do a pre-approval application for a mortgage through Keez and get approved in as little as 48 hours. So those two things have really changed both the convenience and speed and efficiency at which people discover, find properties, and get pre-approved for mortgages.
That is pretty cool. How long have you had this app? How long has it been available to the public?
It's been 2 years, just about 2 years. We beta launched in December of 2018. So we really came out of beta January of 2019. So this is like going on 2.5 years. This June will be about 2.5 years.
And how many people currently use your app?
Marvin can give you some of that data.
Marvin?
In terms of the app, we have in excess of 10,000 downloads, but the bulk of our traffic actually comes from our website, mobile and desktop. Aggregated, we have about 100,000 users every month.
Nice.
So quite a significant number.
That is a lot of people, and most of these people are coming from where? They're Jamaicans using this app?
They're all over. Primarily, we notice the diaspora areas. So you have the US, Canada, and no surprise, the UK. Those are the three majority areas. So 25-75 split. And I would say of the 25%, obviously the majority is the US. And then the second highest is Canada, and then the third would be the UK.
A big diaspora market. All right, so we track the real estate markets quite a bit here on this program. I like to look at what's happening in real estate, the trends. So you clearly have quite a bit of data from the past 2.5 years that you would have collected through people using your app. Tell me what you've noticed. What are the numbers telling you?
Well, it depends on the approach. So if it's in terms of raw property values, I think everybody in the country knows that it's going up beyond inflation. So we can make an assessment of what that means in terms of affordability. And then secondly, the demand just continues to outstrip supply considerably. So it is, especially in the price range that is affordable to most Jamaicans. So I think those are two of the issues now that I would say are the biggest concerns to people looking for homes. The NHC price range in particular. So you're talking about the $20 to $25 million houses or apartments, or in that price range. It is when properties go on the market, it's as Ajani will tell you, because he focuses on that side of the business. They're snapped up pretty quickly. So if there's any specific area of the real estate numerically that you want to touch on, then I can dive more into that.
Well, let me hear the assessment from Ajani, because you have put it into plain black and white. The demand is far outstripping the supply, and so property prices have been going up. But Ajani, what is the reason for this huge demand right now? Because this is a difficult time. You'd think that people don't have money and are delaying investments. So why are we seeing such huge increase in demand?
Yeah, one of the things that we discovered, Kalila, that has been interesting to me as we look at developed nations versus developing nations, is that if you look at a lot of developing nations, there is a demand crunch, right? So with that demand crunch, or actually not demand crunch, sorry, supply crunch. So with that huge supply crunch and a huge demand, you're basically having this kind of distortion, right? So actually, it has actually helped us in this COVID period, right? So because we have very limited supply and we have this high demand, some of the things that we were noticing, like for instance, I'll give you some specifics, between the $15 to $20 million property price range, there was a demand supply ratio of 40 to 1. So that's 40 people for one property.
Wow.
Right? And then in the 20 to almost 40 million, there was like actually 45 million, 20 to about 45 million. There's like a 20 to 1, right? Demand, 20 people that want one single property. So those were the things that pre-COVID were causing that price pressure to continue to rise. And it obviously was a seller's market,
Oh, that was pre-COVID.
Right. So I'm saying those are the pre-COVID numbers, right?
So what are the during COVID numbers?
All right. So now that COVID happened, let's say half of that fell, which it didn't. I mean, we saw maybe we saw like a 70% drop in the diaspora demand, right? Which was represented 25% of our audience. But on the Jamaica side, we only saw like a 7-8% drop in demand. But let's say this demand dropped by 50%. You would still have a 10 to 1 supply issue in that $15 to $20 million range, and you still have a 20 to 1 demand supply ratio in the 20 to 45 million. So literally, does that really change the entire landscape of there still being a demand supply issue? It doesn't, right? So COVID has not been able to completely remove the supply side issue and that demand side issue. So Because of that, we've actually been able to survive because of a lack of supply. That has actually worked in our favor.
And Marvin, so you guys have actually seen an increase in people using your app since COVID, haven't you?
Yes, quite a significant increase, and we attribute that to I guess social distancing being one major part. So it's not as easy to go and view a physical property. So, and as such, viewing online becomes more attractive. We were growing organically before, but COVID just put it on boosters. So we, as I said, we're now at 100,000.
Mm-hmm. So on the supply side, no, because if you live particularly in Kingston, you would have been noticing apartments, especially going up everywhere. It seems like there's been more interest in people building townhouses now. And you're saying that's still not enough?
Right. So the condos in terms of apartments are a little bit different. So again, that supply demand ratio issue is specific to location, is specific to price, and it is also specific to type of inventory. So you have houses, you have apartments, you have townhomes. So the things that are in deep crunch are definitely townhomes. So you have townhomes between the $20 to $50 million range in Kingston, which people cannot just get enough of. Right. And then in terms of homes, whether in Kingston and even St. Catherine, people cannot get enough of those in terms of affordable inventory, and in Montego Bay. But when it comes to apartments, those I think people felt for sometimes were a bit expensive. And so, but those two have been selling. I would say that their demand is a little bit softer than, homes for sale and townhouses for sale. But eventually, there's just not enough land in Kingston, and God isn't making any more land. So at the end of the day, people have to go up. So I think with also the advent of the reduction in the NHG rates over a year ago, NHG rates went down from 6% to 5% and to 4% by the Minister of Finance. That created huge access, right? And then they also went up from $5.5 million benefits to 6.5. So they gave two people combined could now put $13 million together versus 11. So they have a greater ability to afford more at a lower monthly mortgage rate. So those things are also helping to drive that demand issue.
So what's the ratio on the apartments, the demand for those luxury apartments that seem to be going up everywhere?
Well, I think Marvin should answer that because Marvin is getting into that business actually.
Well, I honestly, I don't know the number on the luxury side. I'm more on the townhouse side, as Ajani pointed. That is where the massive demand is, because of density requirements. That's why primarily you don't see developers building as many townhouses, because you can naturally put more apartments into the same land, right? Right. So, but to be honest, Ajani, I don't know the demand numbers for the luxury apartments off the top of my head. But if you just look anecdotally on the listings that we have, you'll realize that more times than not, the properties that are on the app for the longest tend to be those type of units that are in the, let's say, $50 million for a relatively small apartment. They tend to linger a little longer.
So tell me about the profile of who is buying these properties. Who are buying the most right now?
I would say those are a wide demographics because we're talking about professional Jamaicans primarily. So we have had doctors, we have had lawyers, we've had folks that are in marketing at different home improvement companies. We've had so many different types of persons. So generally what you see are professionals, right? So gainfully employed who have been able to retain their jobs during this COVID time. So, they work at the telcos, they work at the banks, they work at companies in food production companies as well. So folks who are still gainfully employed and have that confidence that they will be gainfully employed are those who are continuing to buy in that particular segment, especially that townhome segment and the houses for sale segment. But even young professionals. I was just about to say, at least from our advertising, we tend to see the most responsiveness from the 25-year-old to 34-year-old range. That is our largest demographic. And funny enough, our next demographic is actually like 35, 36 to like 44. So those are the two largest markets. And then what you're seeing now is a definite increase in young people, right? Again, because of the NHG, but generally a little bit more affordable homes, who are actually under 25, right? So you're actually seeing somewhere between even 21 to even that 30 range has drastically increased as well. But they're
25 to 44 is actually the demographic that watches this show the most too. So it's a good fit.
Wow, exactly. So that range is that's the bulk, and I mean, and that generally fits in with, I think, real estate worldwide. So it's not a different, it's not an anomaly versus global standards, but definitely
I ask because there is a perception out there. A lot of young people feel like the prices are just so high right now that me as a young person, I just can't afford to buy one of these properties. But if you're telling me that people in these age groups are buying, then that is good news.
Right. So let me caveat that. So the younger folks, where you have generally, especially couples coming together, married couples coming together, putting their NHTs together, putting their two salaries together to get a joint mortgage and joint NHT. So you have folks that, will get the 13 million, and then maybe they can get another 15 million to 17 million, and they can put like a 30 million. I literally just had a friend, two friends who are actually married couples who just bought their home in Mona, and they paid about 31 million, and one is a marketing professional, the other one is a sales professional. So, and they're in their early 30s. So that is a similar demographic. I would also say that younger folks who are not quite at that income level, what we're actually seeing them is that they're pushing out further out of Kingston. So they're going into St. Catherine, they're going to Greater Portmore, they're going out as deep as Old Harbour. That is becoming really the next wave. We're also seeing literally in the last, I'd say 3 months, a serious uptick in Spanish Town. So Spanish Town in the early days was still, sporadic. I mean, it was there, but now we're seeing regular submissions for Spanish Town. So St. Catherine is becoming the next place because folks can still access Kingston through Mandela Highway, et cetera, et cetera. So folks are looking outside of Kingston, definitely.
This data is golden. I love conversations about data. I'm a numbers person, and I'm sure a lot of people are watching right now and thinking, okay, so where do I have the best chance of finding an affordable home? And of course, affordable is relative to your income and what you can afford. Have you seen, well, let me ask you the question. Let's say I am in my late 20s and I'm looking for something around 25 million. Where do I stand the best chance of finding that?
You have a few additional questions that you would need to answer. Firstly, how is the family structure? So if you're only a single person, then you're open to an apartment in Kingston. So you can get an apartment in Kingston for $25 million. But if you're married and have a child, then a 1-bedroom apartment doesn't seem feasible. A 1-bedroom apartment in Kingston, a 2-bedroom apartment in Kingston is likely more in the $30 to $40 million range. So with that dynamic of a child and a married couple, you likely have to, as Ajani said, push into the St. Catherine side, or you can go to the Kingston 17 side, to Old Harbour side. That would be more likely. So if it's in summary, if you're a single person, $25 million can work in Kingston. If you have a child, then you're thinking staying in Kingston, you're more in the $30 million price range.
What about a 3-bedroom townhouse in Kingston for a married couple in their 30s?
All right.
I know that's where you said a lot of demand is, right? The townhouses.
That's a lot of demand, and 30 is really tight. Those at 30, 35, 36 to 40, anywhere between 30 and 40. I mean, you're going to have maybe 30 offers on a property like that, 20 and 30 offers. If it's in Kingston 10, like near Devon House, on Kingsway, those are gone. So it just depends on where. But we just had a scenario recently where a colleague of ours bid over 50 million on a townhouse, and it was pretty much a cash offer. They're in finance in one of the banks, and their offer was rejected. It was beat by someone else who offered all cash in basically all US. That was quite staggering to just hear that, to see folks in that category lose bids on properties in the $50 million range. So at $25 million, just to add to that, You can get stuff in Kingston. You're not going to get it in Kingston 6. You're not going to get it in Kingston 8 in terms of a house. But you could get maybe Kingston 5, an apartment like on Worthington. You know, you can
That's
get
in New Kingston, right?
That's in New Kingston. But again, it's size, right? So you might get a studio, you might get a 1-bedroom apartment. Now, if you want a home, you'll likely have to look further out into Kingston 19, Kingston 20, all right? So that's like Meadowbrook, Havendale, those areas. And those are fabulous neighborhoods that really need to be rejuvenated, right? So young people definitely should be buying those up and remodeling and rehabilitating those neighborhoods, because great neighborhoods. But generally at 25, it's going to be tight in terms of just area code and what type of property that you're trying to get.
Yeah, that's what we've been noticing for real. What about the rental market? Because Keez also does rentals, right?
Yes. So, and I want to caveat something, you know, we're not realtors, Marvin and I, we are technologists, right? So we really have a tech company. We're a lot like Google. It's just that Google indexes all information. We solely index real estate, right? And curate it and present it in a way that's easy for people to digest. These listings are generally not ours. So we actually enable and connect users with brokers and their agents. So all these listings are really the listings of our partner brokers and their agents. And so we really try and showcase those listings and push those listings to marry those two together. So your question about rentals is interesting, because from our data, we saw a 20% uptick, I believe it was, I'm going off memory, in rentals, right? Because there was a time when our sales customers were like 79 to 80% of our audience were sales customers, and about 20% were rentals. But what we've seen is that that's now gone on to about 73% sales and 27% rentals. So rental volumes have skyrocketed in terms of demand, and primarily because people have paused and hesitated, for those who feel like they're priced out, one, or two, people who feel that it's just not the right time. You know, it may be job security, hesitancy, COVID, you know, insecurity, many things. And then the third thing is that we're seeing that price points of rentals have been under pressure, and they have come down a bit, where home prices have stayed steady. Rentals have come down and become more affordable. So when we used to see rentals for 120, 150,000, 200,000, we're starting to see more 85,000, 90,000, 100,000 in pretty good areas. I mean, in Kingston 6, Kingston 8. So that has been surprising. And so that has been really, we've seen a serious uptick of demand in rentals by 20, 30%.
What are your projections for the rest of 2021 heading into 2022? Are you noticing that real estate prices are continuing to go up, or are they staying steady? What do you expect to happen?
You know, one thing that we are averse to is forecasting. Marvin will tell you.
We're not. Tell me what the trends are showing.
Yes, trends. Okay, great. So definitely in terms of the data that we're seeing, and we're going to assume that recoveries continue with vaccinations, borders opening up. One, we've already seen it, right? So where the diaspora numbers fell by almost 70%, demand in the diaspora numbers fell by 70% in the midst of COVID. We've seen that rise, probably rebound 50% of that loss. So it's down only 35%. So if that continues, then price pressure continues to go back up for houses for sale, right? So you're going to have rebounds, especially in areas like Montego Bay. I think that area has been a little bit softer, and I think that is definitely connected to the diaspora fall off. So I expect to see really price pressure for homes for sale to continue to hold steady, if not start to increase again. That slow creep. I don't think they're going to skyrocket, out of the stratosphere. And I would say in terms of the rental market, we expect that to likely continue the same, because a lot of people have probably incurred debt over the last 12 months because of COVID, because of the Airbnb market being brought to almost zero and maybe rebounding to about 20, 25%. So a little bit more of that inventory is likely moving from short-term into long-term, folks making sure that they're trying to protect their mortgages. So I think rental prices are going to be pretty still attractive, at least for the medium term over the next 12 months. Maybe by 24 months, we'll start to see our rental market prices start to rebound as the Airbnb market reopens.
Interesting. Anything you want to add before we leave, Marvin?
No, Ajani captured the numbers quite well, as you say. I'm the numerical guy, so that is a accurate assessment in my view. As I said, we don't like to forecast, but I think those rent holding steady, and then the demand side picking back up will eventually lead to either a stable, either prices on the sales side remaining where they are now, or continue to gradually go up again.
Still a seller's market. So
Yeah.
buyers, uh, not a, well, I guess you want to do it before it goes up even further, huh?
Exactly, and factoring in construction costs as well, because the material costs have gone up by 10%. So there really is no benefit in waiting.
Very
Food for
good point.
thought. Thank you so much. Appreciate it.
Thank
So
you. Thanks for having us.
thanks for having us.
Thanks, Marvin. Thanks, Ajani. Up next, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency, Insurance Made Easy, and Massey United Insurance. How good is your insurance?
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange advanced, with the combined index gaining almost 1%. 103 stocks traded across both the main and junior markets of the JSE for the week ending Friday, April 16, 2021. 40 advanced, 48 declined, and 15 stayed the same. Nearly 106 million shares changed hands on the Jamaican dollar market, totaling nearly $605 million. Wigton Wind Farm ordinary shares traded the most, taking up 29% of market volume. The stock remained the same to open the week at 65 cents. Mailpack Group traded the second highest, with people buying and selling nearly 14 million shares in the company. The stock lost 14 cents to open this week at $3.40. And the Trans-Jamaican Highway rounded out the most traded, taking up 7% of market volume. The stock gained 3 cents to close last week at $1.38. Now let's see who had the biggest gains. KLE Group rose 37% to close last week at $1.40. Main Event Entertainment Group stock came in second for last week's biggest gains, with its stock rising nearly 36%. The stock opens this new week at $4.74. And rounding off the biggest gains, Iron Rock Insurance Company, which advanced nearly 32% to open this week at $3.80. On the losing side now, Epley's stock fell to close last week at $28.06. Stationery and office supplies stock fell nearly 13% last week, down to $4.80. And rounding off the biggest losers, Access Financial Services, which lost 10% to open this week at $20.19. Market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by investment analyst at Proven Wealth, Julian Morrison. We also have back with us equities trader at JMMB, Clive Charlton, and our staple business writer at The Observer, David Rose. Hi, Julian, Clive, David. Good to see you.
Hi, Kalila.
It's good
Morning.
to
How
meet
you
you,
doing?
Kalila.
And it's been a minute since we've had you on, Clive. Always enjoy your input.
Well, thank you
And
very much. Yes, it has been a while. I think this
And
new.
since you've been away the longest, let's start with you. I want to look at what's going on with PamJam. So PamJam being a real estate company, PamJam Investment took a $5 billion hit last year. That's a lot of money. Why did they
Yeah.
lose so much? What happened?
Well, the difference with PamJam, it's not a standalone company in terms of its business enterprises, right? It has its main business line, which is property management, development, etc. But it relies heavily on its associated holdings. And a good deal of PamJam revenue comes from these additional income streams that are really generated by companies separate, that is not directly under its board of supervision, and that, especially Sagicor, which is a major contributor, took a big hit. And Sagicor, of course, we know, a flow-through company, subsidiary, is the X fund, and the X fund is one of the significant holding asset is the Playa Hotel Group. So they took a big hit through that chain of events.
So what are some of the companies that PamJam depends on that they have holdings in?
Okay, well, some of them here, of course, is Renault, Sagicor Group Jamaica. There's Newcastle company. There's Chucker Cove Caribbean, which is in the pleasure. That is a travel industry, sorry, hotel and travel industry. Carib Hospitality Jamaica. These are some of the principal contributor to earnings. Right? And of course, Sagicor Group Jamaica, which is significant. Have a significant holding, 31%, roughly, which is about 1.2 billion shares holding in this company. Yes. So those would have impacted PamJam significantly. But nonetheless, even though their earnings was impacted significantly, I think that like many of these companies, their balance sheet is very solid.
We spoke a little bit about PamJam on the show last week as one of those companies that would have been affected by the freeze in dividend payments for companies that hold more than, I think it was 1% in large companies. So how much did that affect PamJam?
Well, the cash inflow has been impacted significantly. It has such a large holding of associated company. Sagicor would have usually contribute in excess of $500 million raw cash to PamJam through dividend payment. That has slowed down substantially because Sagicor is a financial holding, designated financial holding company, right? And BOJ spoke to banks, financial institutions, and financial holding companies. Sagicor is one. So their income flow, cash flow in from Sagicor would have been impacted. Associated companies too, whose business went down, would of course want to retain as much cash capital as possible. So that again would have receded somewhat for PamJam. But PamJam didn't do well in terms of dividend payout. Mid last year was when they reduced their dividend payout from about, cut it probably by half. Usually they declare about 27 cents per stock unit. That was cut back in the second half of last year to about 10.5 cents per stock unit. Early this year, since here, they have declared one dividend so far, and it's a reduced amount. So I can understandably they have paid out less dividend, but they have maintained the cash flow, the cash stream nonetheless. So persons who are used to having that cash flow by owning the stock would still be getting some form of cash flow. And I think that's admirable. But
Julian,
they have a very strong. Sorry, go ahead.
A strong what?
But their cash, their balance sheet is really very healthy, so they can afford to maintain even a reduced dividend payout.
For how long can they maintain that, though?
Well, they have really serious. Let me look at their. Well, as to how long is at the discretion of the board.
Right.
They have several projects still that they were rolling out before COVID. You need to maintain some form of a strong equity base to maintain those, right? You don't know how long this COVID thing, in terms of its impact on the economy, the recovery will take a little while, so you want to make sure your equity position is very strong. So it's difficult to say how long they'll maintain it, but so far, I think they have done fairly well.
Julian, what's your take on PamJam right now?
Well, PamJam it took a hit in 1 year, but based on the balance sheet, based on their cash levels, based on the strength of their equity base, they have a very strong shield against these shocks. So even looking beyond that, we can look at some of the investments that they currently hold. So recently, and we say recently related to the rest of the portfolio because they would have had some investments before others. Fairly recently, they moved into the BPO space in terms of investing. So they own a stake in ITEL BPO that seems to be doing very well for them, even in light of the pandemic shock. So that would have offset some of the issues that they had facing other investments like the ones mentioned before. They also own a portion of JMMB. I believe it's about 6% of JMMB. So what is interesting is that the Playa exit will be impacting Sagicor Financial Corporation, and also because JMMB holds a portion of Sagicor Financial Corporation, it will still filter through to PamJam. So the Playa exit is going to impact PamJam through its holding in JMMB and through its holding in Sagicor simultaneously. So that should be a material impact to the company's performance going forward in a positive way.
I'm gonna add some color to that.
Oh, okay,
So the
go
thing
ahead.
is that PamJam only owns about 5% of JMB, so they want to get benefit from market movement to the market
Right,
price.
right.
So the reduction of the stake in Playa doesn't really affect PamJam through that actual stake related to JMB. How it does benefit PamJam though is through their Sagicor Group associate stake, because the result of the removal of Playa will result in X funds potential losses or gains being much more reduced. So basically, that reduction of Playa stake has benefited PamJam transitively now going forward, despite this one-off $200 million loss in the first quarter, but it's not that transitive through JMB as you were mentioning earlier.
But the thing is, when the because remember it wouldn't happen at the same time. So when JMB reduces their exposure to that investment, right? The thought process is not that they would happen in the same way, or that they would happen at the same time, because okay, when SFC, right, distances itself from Playa, it means that from a market value perspective, it would mark the value of the assets up. They would be able to write up because that distressed asset would exit the balance sheet. That would filter over to JMB. But remember that JMB, when they improve in terms of their earnings, the market would respond to that. And by virtue of the market responding to that, it will allow Sagicor, it would allow PamJam to actually benefit from that. So I meant it from a market value perspective. That's how I meant it.
Clive,
not
you agree with
necessarily.
that perspective, Clive?
Well, there is always a flow through effect, right? But what I think what David is referring to is that JMB owns Sagicor, a chunk of Sagicor, 22% of Sagicor Corporation, the parent company of Sagicor Jamaica. Playa will flow through X Fund and will flow through Sagicor in both ways, directly to X Fund and directly to itself, that's Sagicor, right? And then that now will flow through to PamJam. So there are two, call it two doors or two lines, right? Yeah. So basically that's it. But yes, the flow through effect is correct, is significant and important to follow through. But the Playa effect goes through X Fund, Sagicor Jamaica, through to PamJam.
Understood.
Well,
All right, let's move on to a different topic, because clearly you guys can debate this all day. Let's move on. So Proven, Julian, that's your company there. Proven has announced that they are, was it acquiring? Is it 100% of Heritage? Yes, 100% of Heritage Education Funds International. I don't know how many of you are parents, but if you're a parent in Jamaica, chances are somebody from Heritage has given you a call, knocked on your door. They tend to find you to get you to sign up for those college plans for your children. So, David, how important or how big a move is this, Proven acquiring Heritage? And it's a second acquisition in what, like a month, right?
In 4 months, actually. 3 acquisitions in 4 months. You had Roberts Manufacturing in Barbados in January, $21.5 million US. You have Fidelity Bank in Cayman, which was in March, and then you have Heritage in April. So the year just started, but Proven is the one leading the M&A segment of the market right now.
Yeah, they're moving fast, putting those APO funds to good use, I see.
Yes.
Agree that. Here's there I think it's a mention. So recently the BOG actually released the rule regarding the 1% holding. So as a result, the $100 million was actually being held for a JMB, or Proven stake, has been released. So Proven actually has another $100 million they actually can use now for their regular deals. And the thing is, instead of taking Heritage, I'll let them take direct access or a new entryway to the Bahamas, because that's where Heritage is actually based. Because Proven acquiring Robert, expanding to the Caribbean, because lowest port to the Caribbean was St. Lucia, which was through Boston, and now it's Roberts Manufacturing, which is Barbados. Its highest point in the Caribbean is now going to be up in the Bahamas, and its most westerly going to be Cayman Islands, Fidelity. So based on all these acquisitions, what we've seen, when people report their results by August for their first quarter, hopefully everything closes by then, Cruise balance sheet, or I should say the asset base, is going to be more than $1 billion US. Now, Cruise started in February 2010 with $20 million US. And you're talking about 11 years later, and you have an asset base with more than $1 billion US. That's phenomenal. And based on this math I did, Cruise is supposed to book, I think, about $4 million US gain acquisition, whereas Robert's acquisition, based on the price it's paying versus the net assets it's actually acquiring. So all these acquisitions you're seeing proven right now is just a continuation of what they've been doing for all this time, which is acquire, grow organically, and pay some good dividend to shareholders. Because proven as one of the best US dollar dividend yields on the market, around 5%. And with the BOJ's requirement on 1% holding gone, all that capital that was being held up across the market was going to start flowing smoothly, which is going to improve Proven and all of their other associates or respective companies.
Very interesting indeed. I'm sure people are taking notes about Proven. Julian, tell me a little bit more about Heritage. How big of a company are they?
So in terms of their assets under management, it's about 150 million US, which is significant within the context of asset management, because how these companies work is that they earn fees based on the size of the assets that they manage. So let's say, for example, and this is just being hypothetical, let's say, for example, you charge a 10% management fee on a fund that is of a certain size. Whenever the size of that fund expands and you continue to perform, given that your performance is at a certain level, the fee income that you get will grow in line with that. So that's very significant. And clearly, by virtue of Proven making this acquisition, they'll be able to benefit from those earnings in fee income from asset management. What's good is that Proven is already an asset manager through Proven Wealth. They have pension funds that they manage, such as Proven Rock, and they also have their unit trust funds that they do asset management through. So through their learnings and expertise through these business lines, they can apply it across to this investment to exploit any inefficiencies that may be there, and also to increase value for shareholders. So that is an advantage.
So that's one thing I was wondering about this deal. Is Proven going to take a position in the management of Heritage? Are they going to change things up? Will they keep the brand name even? Or will they just leave Heritage to continue as they have?
Well, we're not clear on those details just yet. But from the standpoint of owning 100% of the shares, you would have a material impact on the board decisions. Even if you don't manage the day-to-day operations of it or being active, you would still have significant influence in terms of the strategic direction of the company, which involves some of the things that we mentioned before.
Clive, what's your take on this latest acquisition by Proven?
Well, Proven has by now, for me, it's important. Leadership is important, or the management structure is important. And usually I like to look at like one, this is my opinion, publicly, how these persons fare in the public's eye. Management discussion and analysis, and how they are fared in terms of achieving their strategic objectives. And Proven already several years ago, when they structured the company, they have indicated how they will grow, and so far successfully they have done. They have made some really good picks in the market space. Picks that are not only diversifying in terms of product offering, but diversifying in terms of currency, geographic areas and region. But I can say that they are also building a regional conglomerate. They are now a region, well, technically, by their holding and associated holdings, could be considered a regional conglomerate, So I think they've made a wise decision. It's 100% yes. So chances are you will see some decision coming that more than likely will broaden the horizon of Heritage Corporation, and they have the capital to do it. So I think there are good things ahead. They have paid dividend consistently. Nearly every security has been impacted by the COVID in terms of prices, so I wouldn't worry too much about that, And I think it augurs well for them. and the investor-based stakeholders.
So Heritage was a good pick for them, a good buy.
Well, I have not seen the financials of Heritage, but I know there's a very old company, it's a very well-known company in Jamaica. We know it's strictly strategically focused on in education experience. Right.
I feel like their salespeople have links at the hospital, so they know as soon as they have baby.
Yes, and don't have exactly. So I think it's a good move, more than likely. And let me tell you, I have faith in the proven team. I have faith in the proven team.
I can agree with that. Absolutely. Yes. All right. So before we wrap, let's take a look at the international markets briefly. Julian, this week you're eyeing Crocs. Them ugly shoes, seriously? Why are you looking at Crocs?
Well, Crocs is a manufacturer of lightweight, comfortable footwear. The footwear tends to be very robust because of the resin design that they use. So it has.
You have any Crocs? You own a pair of Crocs?
Yes, I do.
I can tell. You sound like a fan.
No, I'm just giving the profile. So it has wide functionality in terms of how it's used. And because of that, it has generated strong demand and it has a strong core following in terms of its customer base, which is a competitive advantage. So right now, the stock is about $78.89. It trades on the NASDAQ. In terms of the performance, the profit leaped for the full year results. So it closed at 312.86 million US, which is 2.62 times compared to the prior year. Just for perspective, however, there was a $105 million tax credit, which pushed the earnings. But even outside of the tax credit, the pre-tax earnings grew 73.46% to $206 million, which is significant. So in terms of the revenues, however, that grew 12.62%. Most of the growth was from North America. Asia took a hit because during that year, you would have seen significant restructuring of supply chains in that side of the world. And also, what's important to reverse that is that China's GDP grew 18.3% for the first quarter.
I saw
March
that.
2021.
That is massive. China is that steam engine that just keeps going, huh?
Right, because the supply chains would have normalized now or started to settle down, and a lot of the pent-up demand that would have been behind that is now flowing through. On top of that,
and we've been here struggling for 5 and 4 and can't reach it yet. 18% China gone.
Yeah, that's a different animal. But in terms of retail sales in China, retail sales are up above 34% year over year for that March period, talking about the first quarter of 2021. So Crocs should be able to benefit from some of that retail activity, which should feed over into its earnings. And North America, of course, is benefiting from increased dividend payments and increased consumer activity because of the stimulus as well. So those things combined should filter over into Crocs' performance and give some creditable results, all being equal. So we're looking forward to that for the first quarter of their financial year, which should be at about April 26th. The earnings should come out. The expenses grew 9.7%, but overall, when you notice the entire picture, their cash flow is also up. Cash flow from operations, that's up significantly, about 3 times. So it's at $266.9 million US dollars. So we noticed that not just profit leaped, but cash leaped as well. Cash flow from operations, which speaks to the quality of earnings, not just the quantity. So that is a positive signal. The stock itself is down about 8.7% from its 52-week high. It doesn't really pay a dividend. It has 0% dividend yield, and the PE is around 17.5 times. So that's somewhere worth looking in terms of growth for a stock that is supposed to ride the wave of recovery.
Interesting. Thanks so much for these perspectives. I appreciate it, guys. This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at KalilaReynolds.com and turn on those post notifications so that you can be the first to see all my other features, because we want to help people learn more about money so we can all get this money together. This week on Money Mondays JA, we're looking at financial habits that can change your life. And on Money Moves JA, we're getting some inside tips on applying for the DBJ's Ignite grant from a past awardee. Remember, the deadline to apply is coming up. Follow me on Instagram and Twitter at Kalila Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Also visit our website, KalilaReynolds.com, for financial information you can use however you like it. Watch, listen, or read. Now tell a friend about Taking Stock. Investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. Let's get this money.
Let's get this money.